Hi and welcome to the Dow Market View for Wednesday, the 1st of October 2014. Starting on the left-hand side of the 5-minute chart, we can see, again, the market struggling in the pre-market session there, and then at 2:30 we see the market opening. Bit of indecision here at 14:35, the first 5 minutes, and then you see the selling coming into the market. We're down through the support there at 17,050, but then we start to see some professional activity. So we're marking the market down, we're shaking out the longs, we see the market being tested, we get the final push to the downside, and all of a sudden the buying comes in, and before we know it we're back above the 17,050 level there. We're also above the previous day's close, so again giving strength to the market. We see the market going back to 17,100, and then all the way up to the R1 target there, where we get our first sell signal, which by the dark purple colour there, or dark red I should say, we see the market putting in a profit there of 20 pips. The market trading back down to the support. We see this with the buying coming into the market here at 17,050, the market bouncing, and then we get a second sell signal there, which also goes on to make a further 20 pips, and in fact more. And on many occasions I've spoken about this, and I'm just going to draw this in for you, but if you always look to the left, you will see why a market stops where it does, and in this we have this perfect example of it. Let me just remove these lines off the first one. I'm just going to remove the scalp line, and using the tools, the pip management, I want to show you why this is so important as well. So from the entry price down to the support to the left there is 53 points and not 20. So again, by using the information that is available in the price chart, we had buying here, which is seen by the green bar there. With the increase in buying, we see the market trading right down to this area, and we see the buying coming back in again. They don't want the market below this level, and then we see at 8:20, if you traded this, generally not a good time, but had you have done, see the market trading back up to the resistance there for 20 pips as well. But certainly a good 70 odd pips or points in the Dow for yesterday's 5-minute chart there. In the daily chart, so I'll just wind it back over, we can see the market yesterday opening, trading higher, and then coming back towards the mid-range there of the test bar for Monday. So the market stuck in a bit of a sideways range, and that's fine, because in a 5-minute chart, a sideways range, I'll get my teeth in this morning, is not a bad thing, because you do get this up and down, where we do get the signals then, as opposed to going in one direction, because most of the time the market doesn't actually trend. It sort of has a spurt and then trades sideways, has a rest, and then continues again. So no surprise that the more profits that we've had in the last few months have been in the market where it's been stuck in this sort of sideways trading range, because the more oscillation we get, the better off or the more signals we actually get. And finally, let's have a quick look at the news. We're only interested in after 3 p.m, unless of course you're trading the currencies, which of course you'll need to look at. But for the Dow, 3 p.m. is ISM manufacturing PMI out later today. That's to show a decrease. If that's the case, then we can expect a bit more downside pressure on the market. So we'll quick look at the implied volatility before concluding. And in the implied, we can see we're up slightly, 1262, heading back up there. So there's definitely some downside pressure heading for this market as it's being marked up. So I wouldn't be surprised if the short side doesn't become the best side within the next couple of weeks, if not sooner, because there's certainly pressure with these lows that we've seen in the implied volatility where we've had the uptrend. I would say that the market is topped out at this time. Right, well, that's it for this morning. I will see you in tomorrow's. Let's hope today is as good as yesterday. That would be fine by us after last week's poor performance. So we do get them. It's part of trading, but certainly we're back. Seem to be back in the saddle. I don't want to speak too soon, but hopefully that's the case. Right, I'll see you in tomorrow's. As ever, thanks for your support. It's very much appreciated. And as ever, thanks for watching. See you in the next one.